So, guys, this is our 22nd webinar in the series of applied Elliott Wave webinars that I have been doing. My name is Neerav, and I am the owner of 50is.com, where I publish my market views and I also run coaching services as well in regards to trading. Before we move any further, let's first have a quick look at the disclaimer here, which suggests that all content presented here purely for educational purposes is I'm not soliciting any buy or sell. And if you do go on to use the views presented here for your trading or investing, then you yourselves will be liable for your profit loss or loss of profit. Now that we are done with the legal stuff, I'll just like to quickly show one important thing over here, which is that I have asked a few of my students to compile the accuracy for 2018 and 19 and sorry 2019 and 2020, and 2019 accuracy is coming around at 84, and since 2020 is not yet complete, so I will not publish it right away. I will publish it either in January or a little bit later whenever it is complete. But currently 2020 we were standing at somewhere near 90 or even higher than that percentage wise. So far now we have accuracy record of 5 years, because 2020 is just like this webinar and next one, and it has always stayed, as you can see, above 80% or more towards 85, let's say. So that's just, I think, I have not personally seen anyone else producing their record which is publicly verifiable and presence of public, like what I do here in webinars is the people are present, so they already know what I've discussed, so there is no room to wiggle around. So with this, I think we have stayed way above industry standards again. Second thing I just wanted to mention is that those who are interested in the classes, that is the personal classes, which is referred as training program LT, for the 3-month training basically, where I personally talk to people and discuss charts and Elliott wave and how to execute trades and everything. They can make the inquiries using this form, 50is.com/training program LT. And I'll make sure to get back to them as soon as I can. In case you or any of your friends are interested, do share it with them. And keep in mind, the sooner you make the inquiries, the better it is, because I generally work with very small groups, not more than 3 to 5 people. So there are only limited seats per batch. Now that I have discussed about the accuracy and the programs that I run, let's now move on to our webinar. And like always, we will move from crude oil to gold, S&P and Nifty. Once I have discussed the chart, I will just ask you guys if you are clear on it or not. If you have any queries, you can just post them in the comment section. So before moving on with crude oil, let's quickly have a look at what we discussed about it in the last webinar and see if that played out or not. So in the last webinar, I suppose we were expecting that more downside can be seen. This is our one hypo or first variation. And second, no, wait a second. Yeah. So we were expecting WXY sort of formation. So sideways and then down. And I believe there was one other hypothesis which was discussed, which was suggesting, yeah, triangle formation and then up and then down. Moreover, my main view was that this is some sort of complex formations and it can go sideways then up or sideways and then down, but more or less a new low lower than the 37 low, I think, is what we were expecting. So it seems from the, yeah, so we were expecting in either case that the markets will eventually break below this level of 37, 36.1 or something, by being sideways and then down, or sideways then up and then down. However, let's see what the current view is. I believe I have updated the counts on this one. So since we saw from the last time, and let me mark the date as well first. Somewhere in October we were doing this. So let me check the date very quickly over here. It is 25th. So over here, our discussions were being made, and the view was either it will go sideways, then down, and then up, or it will just go sideways, then up, and then down. But more or less, it should break below this level of 36.10 or whatever. And as we can see, it has gone below that level, and it did not go on to touch the 38.2 retracement of the price, but that's not really a requirement. It's just a guideline. So I will say we were good with this analysis, and it did sort of do the main thing we were expecting it to. Now let's just look at what's the view now. Now that the last analysis has worked out fine, I believe there are certain things we can change over here. First of all, if this is a W, X, Y, X, Z, then we can say that this analysis is sort of complete. I mean, the downside is sort of complete. Unless, of course, we have the view that this X is still continuing. That is to say that we have a complex structure for this wave X. Now, that will be something we can just check right now. In case it's a complex one, we can say that this will be our W, this will be our X, Y over here, and this X is going to complete not here, but it is still continuing. But that looks very questionable because it's almost near the last high. So I will not take that count as a main count or even a secondary count, but a very low probability scenario because I don't see the markets often forming this kind of complex structure. So I'll just sort of say it is a sort of hypo 3, so very low probability scenario. And our main count will remain that this structure is complete. Now that the structure is complete, this market is open for upside that is higher than the level of 4340 or 50, whatever this last high was. And now that it is open for new upside, then obviously this has to be an impulsive structure in the upper direction. That means we are going to count an impulse from this low of what is this 3346 something level. Now that I have already done on the 15-minute time frame, I believe, and we can now check the counts for this. So I'm taking the structure as a wave one up, and just to quickly clarify to those of the viewers who are not much familiar with the Elliott wave, that impulsive structure is a structure in 5 waves. So basically we are talking about wave 1 up, 2 down, 3 up, 4 down, and 5 up. So that makes an impulse of 5 waves, where waves 4 and 2 are corrective in nature, that is counter to the main direction, because 4 is going down and 2 is going down, and 1, 3, and 5 are in the main direction. So now we compare this rough structure with the actual price action. We can see that 1, 3, 1, 2, 3, 4 are almost complete. I believe this wave 4 is a triangle because it is rather very clear. And if it is a triangle, then it is also possible that it is complete because as we know, triangle has 5 waves inside of it, and mostly they are zigzag structures each. So this one also has, say, what our A and B and C and D and E. So you can say that this is most likely complete as a triangle, and if so, then there should be nothing then other than a straight upward movement, right? But as we know, wave force can be a bit complex, so we will continue to hold the possibility in mind that this wave 4 might be doing somewhat of a more complex formation, like let's just say, let me hide the current counts. So let's just say something like A, B, and then C. So that is again possible, but keeping the fact in mind that the overall count suggests that it's a wave 4, this market we will look for longs, right? And now that we will look for longs, even if it's a continuing wave 4 and not complete as a triangle, let's say this wave 4 is over here and not here, even then we will look to add longs. And if it goes lower, then we will add more longs. If it goes even lower, then we will add more longs. So that's the count we will follow, right? Because if the count is suggesting the directions up, then we just simply buy all lows. And if the count was suggesting direction is down, then we will sell all highs. I think you must have already heard the terminology before, but that's how the concept plays out in actual trading. So more or less, I think it's quite simple. I will be looking to add longs on this crude myself, and as I suggested, we can follow it. If this wave 4 is continuing even, then we can look to add more longs on pullbacks. And last thing is that this impulsive count will get relegated if instead of giving a new high that is higher than this level of 43, the market straight away goes and touches the level of this wave one, then this will not be counted as an impulse. And at that point, we will have to believe that something else is happening in the market. And we have our secondary count, but as I said, it's too low probability. So I will not really be thinking in that regard right now, unless the market does something like that. So yeah, this is our technical level 39, which technically will be a stop, but that's all for crude. If there is any doubt on this one, then you can type that. Otherwise, just type clear in the comment section and we will move on to the next chart, which would be of gold. Okay, Alex. And what about other people? Quickly give me a feedback so that I know that everybody is on the same page. Okay, Eric, and let's just now, I think Harold is also clear. He's typing. Yep. So let's move on to the chart of gold now. And obviously, let's just check what was discussed in the last one. I think around 8 somewhere. Yeah. So in gold, we were expecting a leg up. I was following it very closely over the whole month. And it performed exceptionally well. This last leg up, it just went up as we expected, as we will see on the chart. And let me quickly check if there was something else. Yeah, so this was the main thing. I was expecting a small downward movement and then the next leg up. And we were expecting it most likely to be an A, B, and C. So now just keep this thing in mind. This is the 4-hour chart, and we will now move on to the live chart or the actual chart and go to 4 hours. And as you can look at that, I'll just make a line as well for 25th October, 20, not really 25th, but 23 October. So as you can see, we were expecting a little bit downward movement and then a new high for wave C. It did go down, uh, obviously a little bit more down, and then went up straight for wave C. So I will say picture perfect, as it sort of followed the whole thing precisely as it was expected to. So perfect trade on this one, and let's move on and see what is the view right now. So now, right now, what I'm seeing is that from a longer time frame perspective, there are a bit of too many probabilities on gold. Instead of giving a quick, clear direction, this is sort of a wait and watch market. And let me give you the reasons why I'm saying that. So first of all, if we look on the daily chart, counting this circled 1, 2, 3, 4, 5 thing. So first of all, this does not look like a 5 complete here. The reason for that is that this wave 4 circled. After that, the impulse count is not there. We can count as 1 up, 2 down, and this whole thing looks like a 3. So there is no 4 and 5 clearly here. So second thing that will come to mind is that instead of taking the 4 over here, we can simply take it over here. But if we do that, then this opens the market to new lows, because if this is the 4, then this will be the 5 and the whole impulse is complete, then that would mean bigger downside to be expected in this market, right? Now, these two possibilities are sort of pointing completely different, because if we consider this wave 4 over here and this wave 5 over here, instead of being complete, wait a second, let me, yeah, that's what, that's the exact way I wanted to represent it. So if we consider that this, let's just go with this H1 first, right? So if we consider that wave 5 is still continuing, then we can just remove everything and count the impulse from this level, and then we will be of the view that this is 1, this is 2, this is 3. And when we come to the wave 4, it really has gone way too much lower in price. Generally wave 4 does not retrace that deeply. So now that creates a bit of confusion here, a few questions, that is it really a wave 4, or is it some sort of uh, structure going to the downside, like a 1 2 and 1 2, something like that. But we will stay and say that for now both counts are equally possible. So let's just entertain the idea that this is a complex wave 4, and then there will be a wave 5. And if we go forward with this idea, we can just look at the internal structure of this market. I think 4 hour is good enough. And as we can see on the 4 hour, do keep in mind we are following this CN count or bluish one, so you can ignore the red label. Now if we go forward with this wave 4 idea, then we can just place a 4 over here of lower degree, which I should have done already. Something like this is what I'm talking about, 3 4 and 5, just making it a lower degree. And technically we should not go below the wave 1 high, or let's just say into the price territory of wave 2. So that would make 1770 the technical level where this count is relegated, and we consider H2 as the main count. So 1770 is a relegation level for H1. Leaving that relegation level aside, we just want to count the internal structure of this complex looking price action. So there are many counts that can be done here, but I'll just go with the simplest, suggesting that this is the first leg down as a or 1, and then this will be your B or 2, and this will be your C or 3. So obviously the C or 3 should go lower, and it's already gone lower than the wave A low, but it should go lower and take out the last low, right? Then technically we can say that C may have completed here, but as you can see on the price chart here, it does not look like a proper impulse. If we count this as the 1 and it's very small 1, very small 2, then wave 4 has sort of taken way too much time compared to the 2. But oh well, let's just continue with this. And if this is a wave 4, then the minimum it should go is a little lower than this last low, right? As soon as it goes lower than this low of 1850 something, technically you can say that A is complete here, B is complete here, and C is complete here, right? So now that we are of the view that 1850, a little bit lower than 1850 would suggest that the wave 4 is possibly complete here, we would not like to go straight out long, because as I just discussed, there is the secondary possibility that the whole impulse H2, I mean the red count, this one, that the whole impulse might have already completed here. So even if this market goes a little bit lower than the 1850 level, we cannot just straight out go long. We will have to wait for a proper impulse in the upward direction, followed by a pullback is an ABC, and then we can think of executing some longs with some strict stops. So that's our H1s, which is suggesting that 1850 should be taken to the downside. H2 is suggesting wave 5 is complete over here, as you can see over here with the red 5. And if that's the case, then we can say 1 and 2, and then this is a 1 2 1 2. So you get the idea, it has more downside open. And that basically means that both H1 is suggesting down for short term, whereas H2 is suggesting down for a bit longer term. So let's just say long term. here long term basically just means a few weeks. So basically that means on an intraday perspective, or let's just say for the next few days, we can look for selling opportunities in this market. And as far as my personal bias is concerned, I think it should definitely go lower than this level, which itself is which itself can be a good trade, but only on intraday. So that's all for my view on gold. If you guys have any queries on this chart, please post them in the comment section. If not, then just say clear and then we can move on to the next chart. Okay, guys. So I believe everyone is on the same page here. So let's move on to S&P. So let's just quickly check what our view was on the last webinar. But before that, let me mark 25th or 23rd October over here. So in the webinar on 20, basically this webinar was done on 25th, 4th October and posted on 25th. S&P is at 17. Okay, so in S&P, I believe we are tracking some sort of what looks to be a triangle maybe. But let's check what the main directions were. That's a longer picture count or higher time frame count, WXYZ. Okay, so we were at the end of Y and I'm assuming that this will continue sideways, probably as a triangle. And the price is at 34.60. Yeah, so I believe this is our main view. We were expecting a shorter term wise a down leg, and then it was either open to go more down or it could have reversed to the upside. So that was our main view on S&P from what we can see over here in the last discussions recording. So let's, and yeah, secondary view was that if the whole correction is complete, then we can go just straight down, which I thought, I don't know what my bias was at that time, but I particularly was not interested because eventually both counts were pointing in the downward direction. One was shorter term and one was longer term. So let's move on to S&P, and from there on, as we can see, it did go down. So again, this one performed again as expected, and once the downward movement was complete, we have seen a new sort of an impulse up. Now I would like to make one thing very clear over here before we move, that even though I've counted this structure as an impulse, it really is not that clear of an impulse. I mean, you can count anything the way you like, but there is such a thing as making sense. Like it's having a little bit more of a choppiness than I would like to see. So we will take this count as bit of a with bit of a question here. So, anywho's, let's proceed with what we have here. So, just to make the longer time frame very clear over here, again, our view or my view presently on this market is that this whole move up is a correction. And if it's a correction, and if this view is correct, then whatever movement it gives in the upper direction will later on be seen by a massive downward movement. If not massive, then at least a good big size downward movement. So, anywho's, now let's just check what kind of correction I'm expecting. I'm expecting it to be a triple zigzag at least, because the double part of it is already complete. And those of you who are not much familiar with Elliott wave, a triple zigzag structure has this kind of structure. And on this chart, we are already completed with the W over here. and the X is also complete Y over here. And this X is the one which I believe might be continuing at this point in time. So now that this X, if this count is correct, is continuing, then that suggests that there will be one more leg higher, which can or should take this market higher than the wave Y high. And this is the wave Y high. So technically, it has already done the bare minimum. It has already gone higher than this wave Y high, right? So if we were like going with just technicality, then theoretically you can say that this could be your W, this could be your X, Y, X, one second, Y, X, and this could be your Z as an A, B, C. But I don't believe that to be the correct count. I think that either the X is continuing over here, which is our main count, and secondary count will be that X is already complete over here. Now let's look at the main count over first. So the main count suggests that X is continuing, and in that case, it will be your A, B, C for B, and there will be a C down, right? Now this C down should complete the X as a flat structure. Obviously, we all know that X can be anything. It can take multiple formations, triangles, zigzags, flats, or complex as well. So what I think is that it is possible that this might be a triangle or flat, but eventually there will be a C, right? So if there is a wave C down, then we can expect more downside in the chart of S&P if this count is followed. So that is to say that our hyper one is suggesting something like this, and then there should be the massive fall which we are expecting. So that's for our main take on the chart of S&P. Now let's just discuss the hypo 2. Hypo 2 is suggesting that the X is not over here but over here. If the X is over here, sorry, over here. If the X is over here, then we are basically saying that this ABC flat is already complete, and that means we are in the wave Z progression. In the wave Z progression, this could be taken as an A, this could be a B complete or continuing or whatever, and there will be a C. So as per hypo 2, we will have sideways and then up. And obviously after that, there will be a huge fall. But we are only concerned with this sideways and then up. Whereas hypo 1 is suggesting down and then up. I'll just write it within the chart area. Hypo 1 is suggesting down and then up. And after that, obviously, more downside, bigger downside, I mean. So as we can see over here, these both are offering a sort of, let's just say, different view. One is suggesting sideways to up, and that is suggesting down and then up. So as we can see, we are having a bit of a contradiction here. Let's see if on the lower time frame we can make some sense out of this chart. And now again, the problem here is this leg. It is kind of unclear what the exact count is on this one. So from this chart, you can see I've counted this as an impulse complete, but in truth, it could just be that this is some sort of 1, 2, and this is 3, and this is a 4 as a triangle or something like that, right? In which case, it could be a fifth over here. But if we go with the count which is on the screen and go with the hypo 1, then this should be your last point, right? This should be your last high, I mean the wave B high basically. So wave B high will not be taken out unless we give a impulse in the downward direction. So it should be something like this at least. And by the way, this box is the 50-60% retracement of this price leg. So if we consider this thing that B is complete over here, then we can simply say that this is your 1 and this is your 2 and this is 1, 2, 3, 4, 5 and 1, 2, I mean wave 3. Wave 3 going in the downward direction. I personally will say that unless this breaks below this 3524, you cannot really say that this is a confirmed sell. So for people who are cautious about trading it, they should wait for a low below this level of 3520 to 3524 something. So that's our short term view on S&P. We are expecting the market to fall on a shorter time frame, but keeping in mind that this last leg is not really a clear count, so any trades executed should be done with the extremely tight stop. Basically not tight, but technically sound stop, and the position size should not be massive. So that's our take on S&P. Anyone having any doubts can post them in the comment section now, or just type in clear. We'll move on to the next chart of Nifty 50 then. Thank you, Paul. And I think Alex has a question here. Do you see a scenario where we will not see a fall to March lows? Okay, let me check on the daily chart and see what he is really referring. I believe he is referring to these lows of 2400. So I think we can go down, and let me just talk in terms of Elliott wave. So if this is some sort of three, and this is the count which I think it is, like an A down, B up, and C down, then a wave C, as we know, is not really required to go to the wave A lows, right? Basically, in a flat structure, you can have a running flat. In a running flat, wave B will be like this, and C will be stopping much above the wave A low, right? So let's say if C will be stopping over here, and then it will continue with the next leg up. So yeah, in theory and in practice, wave C is not really required to go to the March lows. On the other hand, it could just be a normal flat structure, and in a normal flat, you can expect downside to touch the wave low or even go below it. So that's about it. It can or it can't, both things are possible, but we can't really speculate. Once this downward impulse starts forming, only then we will be able to clearly judge which way this market is going. I guess that clarifies that, Alex. Okay, so now let's move on to the next chart, which is Nifty 50. Nifty also, we had almost the same view. Let me go to the 4-hour and see what it is. So yeah, WX from this low of 75.30. We had the view of this market forming a corrective structure as WX, YX, Z, just as I discussed in the S&P chart, right? However, things are a little bit more interesting on this one. If we take this as the correct count and this is the Y, and now we are left with two possibilities. If this is the Y and this is the X, then we can even say that this is the A, B, and C complete. And if that's the case, then that would mean the Z is just complete, or maybe a small leg up is remaining. But in either case, we are suggesting that very soon we will see the expected downward movement, right? So the second count over here, this is, let's say, hyper one. Second count over here is that this is the X not complete, but over here. If it's over here, then it becomes A, and then sideways for B, like this or this. I mean, whatever structure it takes, correcting more in time or more in price. And then the next leg up will come in play. And that would mean that we will have the Z over there. So basically, it is at a critical situation here. The count, if Z is complete, then it could mean that we are very near the top on this market. Now, both these things are fine in themselves. That is, we will keep both these hypotheses in mind. But from a trading perspective, let's just see what we can make out of this last leg up. I have gone on to a lower time frame to check this one. And I believe that we have what you call a wave 4, which is either complete or has some downside remaining. So basically, once this wave 4 is complete, I believe the next leg up can come into play. Unless, of course, the market never breaks this high and goes like this, that is even lower than this 38.2 retracement, then we will obviously have to consider the fact that this may be the wave 4 circle complete here, this may be the wave 5 circle complete here, and this might be the z of the higher degree already complete here, suggesting straight downward movement from here. But as of now, we do not have evidence for it. So we will go with the simplistic scenario that wave 4 is most likely continuing. And there is the Elliott wave guideline, which suggests that the wave force generally end in price territory of wave force of one lesser degree. And since this is the price territory of wave 4 of one lesser degree, and we already have touched it, but it would be better to see it go a little bit lower. And this, by the way, is the 23.6 retracement. So it would be nice to see it touch that level. And if it does that, then obviously we will look for some sort of sign of reversal or something. Second possibility, as I said, could be that 4 is already complete here and it goes straight up. So we'll base our trades based on that. And to entertain a idealistic scenario here, we will like to see it go to 38.2. And the way it can do this is, I believe this could be your A, this could be your B, and this could be your 1, 2, 3, 4, 5. So it could be a straight out impulse down, or we can say that this is your 1, this is your 2, 3, 4, and then 5. I'm trying to suggest that possibility of ending diagonal over here in wave C. So whatever the case may be over here, from a shorter time frame, I am more interested in seeing it fall a little bit more before taking any longs. And that's the way I would like to trade this one in the actual market sessions. So I guess that would be all for our coverage of Nifty. And if you guys have any queries in this chart or any of the other charts that we have discussed, you can post them right now, because we have covered all the main charts that we cover on a general basis. Hi, Paul. Thank you for taking time today. Explain observations. I'm just involved in Wave 3 and please consider adding a forex pair, Euro USD, as it has a bigger liquidity. Yeah, Paul. Actually, the thing is that brokers here in India do not really have that pair for trading. So basically, I don't really get to trade it over here. That's why I was not covering it. But let's just see if anyone else is interested in this kind of pairs, then we can definitely look into it. But I cannot promise anything right now. So, anyways, guys, I don't want to hold you guys here any longer. Just for the people who will be watching this recording later on YouTube, I like to mention that account management services are possible here. Given my exceptional track record of about 5 years of 80% plus, 4 currently here, and 2020 will be published soon enough. If any of you guys are interested in management services, or you have contacts who would be, then you can just contact me directly using the contact us page on my website, which is basically 50eyes.com/contact dash us. And I will make sure to provide you with the details of how we operate and what's the minimum requirements and everything. So that is all for our this discussion. And last thing again, I just wanted to point out training program LT. People who are interested in live classes can contact me using this form present on 50hours.com/training-program-lt. So that would be all for this webinar. And thank you guys who joined in. And I hope we can talk next time again, and next time with a bigger audience. So please do share this work once it is posted on my website, and with your colleagues or anyone, friends or family who you think might be interested in the markets. Thank you for joining in again. Yeah, Paul, you too. Stay safe and bye.